looks like we are live.
Yay! Aloha, everybody. Happy Thursday. We are Rise Capital Investments, and we wanted to talk about diversification today on this live and quickly go over a short 5-minute quiz that we created that you can tell and see where you're at in your investment portfolio. So I thought I was diversified when I was back in my job working my W-2 as a civil engineer, and I had a 401k and a savings, and I thought, okay, I'm set. However, once I decided to go full on into real estate, quit my job, I kind of just left my 401k there and forgot about it until 2020 hit, and other people started investing with me using their retirement fund. I remembered it. But when I left my job, it was at about 108, 107,000 that I had in my retirement account. 2 years later, when I checked back on it, it went down to under 80,000. So by me just not even paying attention to my investments, and now I know better, right? But I was like, oh my gosh, I could potentially lose all my money depending on which way the stock market goes, or if I'm in conservative investments versus more aggressive investments. And so that's when, even though I was in real estate, I was fixing and flipping for active income, but I realized I needed to start to get into the passive income side as well. So I started buying rental properties, getting some depreciation from that, but also getting cash flow. And I think it's important even nowadays for people to have multiple streams of income.
Definitely. I think it's one of those things that personally, I would, being in the medical field, and I didn't always have a permanent position. So when I finally did, I wasn't real familiar with retirement plans. And I'm like, I'm so young. What do I need? Never really was educated. We were raised to, like, you get a good job, get good benefits, and buy a home. But what are good benefits? Is it for in the now? It was never really explained. And so I had my retirement plan, go to my next career, and it's like one of those things, you forget to roll it over. You forget that it can actually do more for you. I was just told, if they match you, just max it out. And that's pretty much what I did, never paying attention to what it is that it was really doing. But we're excited to go over this with you guys today. I'm Harmony Borden. I'm with Investor Relations here at Rise. And we just love sharing as much as we can and giving you opportunities with knowing your options. That's huge.
Yes. And most investors miss out on checking, even if they're diversified, because they're not going into their portfolio or they're not actively checking it every single day. And so that's exactly why we're here, to go over ways that you can check if you are diversified or not. So let me share. We're going to walk you through the diversification quiz. Harmony, if you could pull up the quiz itself. So if you guys want to take the quiz, we're going to be putting it in the comments, and you can also go to Rise Capital risecapitalinvestments.co/diversification quiz, or just click the link in the comments and we'll have it in the description as well.
Sorry. I'm getting there.
Yeah, I think it's one of the main things to realize too is when you think you're invested, or you do have investments, to realize there's a big difference between public investments and then private investments. So public investments is more your typical, what you think of, like stocks, bonds, ETFs. And then private investments is more private equity, venture capital, real estate, private debt. So grab a pen and paper as well, just in case you need to take notes, because I know sometimes as well, even for me as an experienced investor, I might have some questions. So we want you to take this Smart Investor Challenge and go over each one and let us know if you have any questions. So we'll fill it out ourselves at first so that you can get a better idea of how you should be filling it out. So the first is asset variety. So how many different asset classes do you invest in? Like we mentioned, there's stocks, bonds, real estate, private lending. are you just all in? Do you only have a 401k, or do you only have real estate? And so this is where you would click that. And I think both for me and Harmony were 4 or more asset classes. And then, like I mentioned before, the difference between public versus private investments. So 90% or more, or 100% public would be if you only had your 401k and you didn't self-manage it or invest it into other asset classes. It's just invested in the stock market. So no private investments. Other ones are if you started doing private lending, or you own some real estate, but also have some money in the stock market. So I think I'm probably about less than 30% public and 70% private. So let's just do me.
Yeah, and this
Yeah.
is going to be important for you to realize where you are in your life and what journey you're on, understanding what it is that you need to start saving for. Do you want to retire if you're in your 30s? Do you want to retire by the time you're 50, 60, 70? Like, it really depends on you, and just kind of understanding what that number will look like when you retire, whatever it's doing right now. And do you need to be more aggressive? And just understanding where you're at. That's going to be huge for this one.
Yeah, and everybody's
So
at different
definitely,
phases in their life. And I think
yeah.
for me, I'm willing to have more private investments, maybe invest in some venture capital deals, maybe invest in some bigger deals that might not be as, I would say, more aggressive. But if you're close to retirement, you'd probably want to be a little bit more conservative. So just be aware of that as well.
Yeah, so this is going to be really good to see where you really are. Answer these as truthfully as you can, that you can recall, because sometimes not everybody stays on top of it. But just answer it as truthfully as you can so you can see where you are, and then what does that look like? Where do you need to be later? Make some adjustment.
Yeah. So risk correlation. Do most of your investments lose value when the stock market drops? So for me, it would be maybe no, they move more independently because I only have, probably less than 20% of my investments into the actual stock market or into the money market. And then are your investments concentrated in one sector, tech, real estate? So I do have some spread across sectors. So if you do a little bit of real estate, a little bit of have your 401k, like I would say that's some spread across sectors. But if you're mostly just only have your 401k or just have real estate, then you would click yes. So I'm probably in the middle. And then liquidity, how can you access most of your investments without penalties? And so instantly would be like it says, if you have cash in the bank, if you have a savings, stocks are pretty easy to liquidate, but those might also come with some penalties as well. I'm probably within the 1 to 12 month range because we do short-term notes. And I own rentals and other real estate assets. So those would take a little bit to sell, but it wouldn't be too much.
Yeah,
That's where I'm at. Yeah.
they're a little bit easier.
Yeah. How much your portfolio provides regular cash flow? I would say probably more than 50%. And then it depends, right? Like Harmony said, just try to look at all of your investments. So like, of course, if you have rental properties, those have some monthly cash flow. If you bought it for that intention, or if you have other investments like private lending or debt investing that pays you out monthly cash flow or quarterly cash flow, that would be something that you would pick. So if the interest rates rise, how much does it affect your portfolio? So this is talking about market exposure. It would probably somewhat affect me, especially for our longer term projects like the syndications or bigger commercial um, projects that we have going on. It may lead us to have to hold our investments for longer. And do you own investments that are not tied to stock market? Yes. So I do have real estate. Alternative investments, you invest in private business, startups, or venture capital. Uh, I would say somewhat, but it's a small portion. So for me specifically, because I am almost 40, and still not that close to retirement, but still, getting to a place where I don't want to be as active, I am taking a little bit more risk with a small portion of my funds. So I guess Harmony, even for you and Chris, what is your take on people starting to invest in these alternative businesses and startups and venture capital?
Yeah, I think it depends on one, their age and how when they want to retire is definitely a portion of that. The other is what are they capable of doing at the moment. Um, some people have a 401k with their employer that they cannot move. Um, they can contribute to their own, they can move part of it with some penalties. It just depends on how much they have to invest. I talk to a lot of people who are now like, I want to get into investing, I'm not sure how. We talk about their retirement, they go look into it and they realize they haven't been paying attention to it and it's not where they thought it would be. So they can't even take a portion of that to move it into anything else at the moment. So understanding where you are, if you're younger and you can afford to be more risky for a higher return possibility, that's great. But one, understanding where you are in your journey, and two, what you're capable of doing is, I think, going to be a big portion of that.
Yeah, because startups, venture capital, smaller businesses that don't have a lot of track record are very risky because a lot of startups end up failing. And that's just the truth about it. But when it comes to your overall portfolio, you just don't want to be all in that and banking on that to make your millions. You also want to have other investments on the side that are slowly building equity, are slowly giving you cash flow, and are more predictable. And so that's why I think a lot of people fall back onto their 401k. But if you also have a savings, like we always talk about, your savings, a typical regular savings is earning like 0.01% in the bank. There's high yield savings that are about 3 to 4% right now. And you could get higher returns out there, but you also want to, number one, just educate yourself on what you're investing in and what the risks are. But two, just make sure that, especially when you're investing in these alternate investments like these listed above, those ones are more likely you could lose all of your money as well. So
Yeah.
just being aware of that.
Yeah, definitely looking at where how much money you have in savings. We are big proponents of making sure you're prepared for emergencies and things
Yes.
like that.
Mm-hmm.
But talking to your financial advisor to understand how much you should really be saving in possibly high yield savings accounts, because you leave it in a regular bank account, you're just going to be losing that $100 in a year from now. It's not going to be $100 anymore. And that's
Right.
something we constantly are reminding people of.
Mm-hmm. And then how much of your portfolio is in cryptocurrency or blockchain investments? None. I don't invest in crypto. And it's more so not that I don't, that I wouldn't. It's more so that I just haven't taken the time to, like I just mentioned, educate myself on it and learn about it. Are you guys invested in blockchain or crypto?
I think I'm going to say no, but Chris might have at some point. I'm not even going to sit here and sugarcoat it.
Just for yourself, yeah.
He deals with the stock market. I think there's a lot to keep up with that and to stay on top of on a regular basis. And that's something he listens to every morning. So we might
Right.
have a
And all
little
the
bit in there.
regulations, and because it's not something that is, well, there has been more talk about it, and people are trying to integrate that into real estate as well. So I'm excited for the future in that. But for me specifically, just like when NFTs came into play and all these new currencies that people are trying to implement, for me, I just haven't, I may in the future, but not at the moment.
Yeah. So let's go get your score here. So here's your overall score. And it's pretty much what you had already expected, right?
Mm-hmm.
And it's something that we personally look at on a regular basis. But to get your full report, a more detailed report for yourself, you're going to want to put your information here, and it's going to email you that PDF on more detailed information for your full report. And I think this is going to be a big part of finding out where you are and what you want to do. And if you're not sure, this is what we love helping people with. Book a call so we can help you along your journey to see what options you have and where you're currently at. And then you're going to want to take this to your financial advisor and definitely seek out your own within your family to see where it is you want to make some adjustments and potentially make more money towards your retirement. Zasha, did you have your report you wanted to go through?
Yeah, let me pull it up now. So I guess, and if you guys have any questions during this live, please put it in the chat while we pull this up.
I know I'd be interested to see how many folks out there are on top of their retirement plans. I'm sure there's a statistic on it.
Okay, here we go. Can you see this?
Not yet.
Oh, I think I got to add it to stage.
There it is.
There we go. Okay, let me zoom in. That good?
Yep. Zoom in a little bit more.
Oh, more. Okay. So when you guys fill out, if you want the full report to see where you could improve or what else you could be invested into, we will send you this breakdown of your results. So I had a 140, so I'm moderately diversified, but have some gaps. It will give you kind of your scoring and then a full breakdown in an ebook format. So I know we all love free. So this is definitely, I always like to just kind of see what other people are doing or what I could do better at or what else is out there. I think just like this quote, the biggest risk of all is not taking one. And not to say that this is a risk, it's just seeing, okay, where else could I be investing in? And again, this is not financial advice, but just personalized so that you can kind of take a look at what you're invested in and just see if you need to talk to anyone else or book a call with us to see what else you could be investing into. So as far as asset variety, I'm highly concentrated and mainly into real estate and private lending. But that is intentional because, like we mentioned, it just depends on where you're at in your investing journey or even what your plans are for the future. So for me right now, before I get into this next stage in my life where I want to be more passive, I'm being a little bit more aggressive on the real estate lending and growing businesses, and dabbled into a little bit venture capital.
I think also looking at the risk of those types of investments, for those who aren't in real estate, they're working their W-2 and they have their retirement. They don't always necessarily have the time or the means to understand it. Like same, we're doing heavily on this side. I don't look at the stock markets to educate myself enough to be comfortable with doing it myself. But that's why you have teams like ours where we are very concentrated and understand the real estate side of it, and the possibilities for your returns tend to be less risky on something like a debt deal where we are the bank. So this is where it's going to be weighing out your risk versus reward, and whether you're in the stock markets or in crypto or within real estate, understanding what that looks like. Higher risk, higher reward. However, looking at understanding with that risk, how much of it is really mitigated with your team. And I think it's just finding a team that you're going to be comfortable enough to say, I know that my funds are going to be well protected in a real estate deal that is a real asset that it's backed by. Something like the stocks and crypto, you don't have a real asset to protect it. So this gives you an added bonus for us.
Yes, and that's why I think you look at these scores that you have in the original email, and then this kind of reads off in each section what that percentage means. So asset variety, I'm a 35%. So that's here, needs improvement. I made a start, but lean too heavily in, of course, real estate. Um, and let's see, explore. So the recommendation is to rebalance between taxable and tax deferred investments. So I do have a solo 401k that I'm invested in as well. So maybe taking a look at if I need to invest more into those type of investments, and then also explore asset types that do well across different market cycles. And like we mentioned, if you want more information or more in depth on what these exactly mean, you can hop on a call with us as well. So I'm in this range, needs improvement. Okay, hopefully it goes up from there. Risk correlation, I'm at 30. So we can keep going down. It explains each one. So I'm at 30%. Okay, need improvement again. So, like you said, there's always good to kind of look over what you're invested in or how you're investing, and then see, okay, where else can I kind of spread some of this risk if I don't want to, be as heavy in one field. So, diversify into non-stock based assets, consider fixed rate and low volatile cash flowing alternatives. I guess what else could I be invested in? Maybe this is just a talk story for me and Harmony of where else could I be invested into to diversify?
I don't know. We have fun in real estate. So
I know. So, like we mentioned, it just depends. And we spend a lot of time in real estate. It's something we understand. It's something that we know tried and true over, the history of, I'm going to say mankind, but forever has been an asset class that is something that is reliable. And like she said, it's a physical asset. So you can touch, feel, go there. There's always ways where you can pivot with it. So I'm much more comfortable investing in that right now versus something like cryptocurrency, or I could look into like, what does Chris always say? Like bonds,
yeah.
treasury bonds and things like that as well, that may be a little bit more less volatile as well, but I don't know enough about it either. So something I
Yeah.
need to look into.
Yes, definitely looking at it because especially right now with the way our economy is and the market fluctuates so much, it can be tough to navigate and then something to worry about on a daily basis. You don't want that added stress. Um, Having that asset to be able to leverage the asset the way we do, looking at our exit strategies, understanding your own market and where you do these at, that is another huge factor to put into consideration with your team that you look into it with. It is a lot more fun for us because this is what we do on a day to day. I'm sure for those who are in the stock world every day, it's fun for them, but I'm pretty sure my blood pressure is going to look better than theirs, anyways.
Yeah, I do remember during COVID, I did buy, like, I downloaded Webull and Robinhood, and I was kind of just watching Jim Cramer every morning, getting all hyped up and just like trading all the stocks. But I had a lot of time, right? During COVID, you couldn't really do anything. So I think that's when I really started getting into that. But that's actually almost like gambling, I feel like, 'cause you're like really dependent on the news. And for me, I was trading on a platform because it was more so just you're trying to predict what the market's going to do, or what this company, uh, what the value of a company is going to be the very next day. So I do agree that, investing into longer term and growth assets should be in your portfolio. And especially as you come into, different different ways to invest, just exploring all of your options, but just really honing in on those that will provide more longer term cash flow. So says I need more monthly and quarterly cash flow sources. So I guess I need to also be more invested into real estate notes. So like we mentioned before, this isn't an end all be all, but it's just making recommendations into what you should be looking into, because I think a lot of us are set it and forget it with our investments, and even maybe our regular accounts. So if you keep looking at it and keep just determining, okay, where's the best use of this money? Where can I make it grow? You'd be surprised to where you're going to end up, and what more you could be making your money work for you. So
Yes, definitely.
my market exposure is moderate. So let's scroll down to there. I think we have a few more minutes. Moderate. Okay, higher. We're getting higher here. Stay
Mhm.
diversified across different geographies and industries. Add alternative strategies, reassess holdings that shift with micro trends. So this is to be aware of as well, especially when it comes into real estate, that you're not all invested into one area, because there could be something that happens in that city, in that state, that, especially the one thing I can think of that is a major topic is always Airbnbs, right? The regulations that come with that. So if you're heavily invested into real estate, maybe the Airbnbs, I would it's an okay a business to have. It is a more higher risk in my eyes, but for those who know what they're doing, just make sure that you're invested across several different markets, just in case for some reason the city shuts down your ability to run a short-term rental business, and that's what you're counting on for your cash flow.
Yeah, and it's a
Yeah.
super active business.
And
Yeah.
then alternative investments 25. So I'm pretty moderate. Oh, weak. Oh, say needs improvement. Maybe I'm up here. So the same thing with that is just looking for recession resistant investments that support my long-term strategy. So this is what you'll get. We just wanted to kind of let you guys into how we are helping people kind of look at their investments, their current investments, and figure out ways to diversify. Because, like I mentioned in the beginning, I thought I was diversified and I was investing because I had a savings and 401k. But that is investing to a point, but you also want to make sure you are investing across multiple platforms or multiple asset classes, because you don't want to get tied up in something like, for some reason the stock market crashes, you lose all of your retirement funds.
Yeah. Well, I don't know if I would consider savings accounts investing.
I know. I didn't even know what investing was at that point. I knew what like a CD was. I think a lot of traditional people know or have heard of CDs at their bank, where they hold your funds, or a high yield
Yeah.
savings, or they hold your funds, give you a higher return. But I never even did that because I didn't understand it. So I think for
Yeah.
those who are watching this, you're already exploring, next steps, and maybe thinking about, okay, how can I make my money work harder for me? If you want to retire earlier, I mean, who doesn't want to retire earlier? So if this even gives you a little bit more of a chance, or buys back some years that you can get to do whatever you want, or buys back some years from you being able to travel more or have more options in life, then it's definitely, worth the 5 minutes to take the quiz.
Yeah, definitely. We love to just hear people's stories, connect with people. The more you connect with others, the more possibilities that are out there for you. It's huge. Learning to be the bank is essentially what this is for us. And who doesn't want to be the bank? I mean, the bank is literally doing that with your money while you're not earning as much as them on your own money. So finding ways to get your money to work for you is something that is huge for us. We work hard for our money as it is, and let's make our money work hard for us rather than giving it to others to make money off of it. So book a call with us. It'll be 5-10 minutes. And then from there, if you are like, I want to partner up, I want to hear more of your opportunities, then we can dig deeper in another call. And if it's something that we're like, you know what, it doesn't necessarily fit with your goals for what we're doing, we have a lot of connections and opportunities out there that we can just say, here, check them out and see what is out there for you. And definitely you want to vet them all out, but we just love making connections for people. If it's not with us, we'll connect you with someone else that can help, hopefully. So
Yeah, I mean,
partner with Brian.
if you're watching this live, you also we will also be doing a webinar in a couple weeks that will dive even deeper into diversification. So we put the link in the chat as well, and then I'll also post the calendar link where you can book a call too.
We have a few comments that were coming in. Oh, there's one of our partners there, how she's um, in public stocks, in all index funds, and then she spends her time managing her private portfolio in real estate and small businesses. We have another one here. Most every portfolio can use improvements in some way or another, even my own. That is so true. I mean, like I said, we set it and forget it, and then we'll look at it, and then in a year from now, are we going to forget about it again? So we're just here to help you, remind you. Check it out. And of course, good job, ladies. I feel like we need some entry music and some exit music here, Zosh. We got to get on top of that.
I know. Well, thank you guys so much for joining us today. Like Harmony mentioned, we are here to help you and just talk stories. So feel free to book a call with us, or if you're available, make sure you register for our diversification webinar that will dive deeper into this topic, and feel free to ask questions as well there. With that,
Yes.
ahuyo.
See you guys later.